Welcome back to the Daily Gold YouTube channel. Thank you so much for tuning in today. This is being recorded on the afternoon of Wednesday, October 2nd, 2024. And with me today for our end of the month chat, as always, is Vince Lanci. He is an adjunct professor at UConn. He's also with Echo Bay Futures, and he writes the Gold Fix on Substack. Professor, thank you so much for coming on.
Thanks for having me on.
We're a lot to talk about. So where do we start? Where do you want to start?
Well, we got to go through the technicals for the month ends, right? The quarter end too. You reminded me off air. But I got to tell you, in the last 8 hours, I saw something that kind of disturbed me, and I don't want to paint a doom picture for the metals, but I want to get this out there before we move to the good stuff. So can we do the bad news first?
Always got to go with the bad first.
Exactly. All right. So people who are familiar, who are not familiar, I should say, I'll just familiarize them. This is for gold and silver, but primarily gold. But silver comes in a big way on the back end. Gold has enjoyed a lot of buying this year, obviously, right? Also, there's a seasonality to precious metals that I speak about frequently. And the seasonality isn't they have to go up or down. The seasonality is between September 1st, simplifying it, but it's pretty accurate. Between September 1st and say November 1st, you have a mechanical liquidation of longs. Funds start to liquidate because their end of the year is in November. Their fiscal year ends in November. So they start to unwind, take their losers first, take their profits, and sometimes they'll hold on to them. And that means there's going to be nonstop selling. We can go up, as you've seen, but during this time of year, if nothing is going on for gold, you'll see that September is a really bad month for gold and silver. Well, right after that season, say after American Thanksgiving, you get and there's an overlap as well. You get a big bank and fund reallocation of money. They get money for clients, they get money from clients, and they say, okay, how are we going to deploy this capital? And they start redeploying capital. Now, the weird thing is what's happening now. For the last 15 years, especially the last 10, if you sold it on September 1st, you would have made money on November 1st. Don't hold me to the exact dates, but that's the idea. And if you bought it on November 1st, you would have made money by December 31st. You would have been able to sell it considerably higher by December 31st. You may not have sold it, but you should, speaking for myself. What happened this year is that this seasonality, which never gets repealed, it's always there. It's based on you got to pay your taxes. You close your position in October, you reopen it in November. Well, that happened, and it's happening. We're in the middle of sell season, but we just keep rallying, right? And we keep rallying because of the events that we've talked about for months. BRICS, election, not to mention the technical pattern that you've revealed, the whole cup and handle, the gold cup and handle, mind you, not the silver one, the faux cup and handle. Anyway, so we're in the middle of sell season, and there is selling. Funds are selling, but somebody's buying, and I'm wondering who the buying is holding it up. And I think the last 2 days revealed who the buying is, and it's a little bit disconcerting. I have a chart we can show, but I think the selling is coming in, and that whole buy seasonality, there's a lot of interest coming from the U.S. right now. Right now, there's a lot of interest coming from the U.S. normies, for lack of a better word, and they're buying in ETF form. They're buying between 9 and 9:30 every day. It's just starting. And the funds are starting to sell to them. So while I'm extremely bullish going through the election, I think we might be running into a little bit of a, what's the word for it? A wall, a selling wall by the rest of these macro discretionary guys that are selling during the month. I have a chart. Do you want me to show it? I could show that if you want.
Let's show it.
because it's stark. If I pull it up, you'll see immediately what I'm talking about. Oh, there it is. All right, I'm going to show it now. Just a chart. So this is a 1 hour chart of the last 3 days for silver on the left and gold on the right. These are spot markets. And the yellow rectangles, they're the 9 a.m. hour. So at 9 a.m. on the last 2 days in gold and silver, you had some mighty spikes. And those mighty spikes are, without a doubt, 100% guaranteed. Nothing's 100%, but you get my point. Those are, without a doubt, the buying that's coming in from the United States right before or during. Now, some of it may be related to data that comes out, some of it may not be. But the fact of the matter is, this is like people buying NVIDIA before the open. Okay. And for the first hour of these 2 days, in both markets, you have a mighty spike. Yesterday, start with gold. Yesterday was a very big spike in gold. And then it sold off. It re-rallied a little bit. There's the cursor right there, right? It re-rallied a little bit, and then it faded overnight. Silver, in this case, followed gold. The buying was in gold yesterday, and silver kind of tracked it, you know.
And so
Today,
every bar is 1 hour, just so people know.
I'm sorry, yes, every bar is 1 hour. I could have gone to 15 minutes, but it would have been too crowded on the screen. I'll make this a little bit bigger if this helps. Is that better?
Uh, it's fine both ways. I think it made it a little smaller, actually.
Did it really? That's pathetic. Zoom. All right. So on the second day, remember, gold came in weaker today. Silver came in up over 1%. So last night, gold tracks lower, silver tracks higher. It's almost like, and heaven forbid I accuse anyone of manipulating or cheating. It's almost like they knew, because overnight in silver on the left, that yellow arrow, they bought it, and then magically there was buying in the morning. In
It's a
gold, they didn't buy it.
That's a
But there was
positive divergence.
what? What does that mean?
Well, silver outperforming. It's a positive divergence.
Right. And so that's
So it
supposed to be bullish?
because it yeah, because it made a higher high and gold didn't. And we talk about how silver can be the tell for gold. But we're only looking at a 2 day chart here. So
That's a really good point that you're making. Now, silver is the tell for gold. Silver creates the follow through for gold when it gets going. However, after a rally, this is an old Goldman Sachs trader talking for you. After a rally, silver sometimes is like the last puff on the cigar. You know what I mean? Like, it's already rallied. Let's get that last puff. Gold trading $2,700. Shit, just throw your money into silver, and they do that. Now, uh, the the market. Here's why I'm concerned. I have to look at the open interest. I'm concerned in the short term because, and by the way, this is going to give us an opportunity. This is not a reason to be concerned. Seriously. I believe what's happening right now, if you look at these charts, I believe what's happening right now is American buying interest is coming online. Interest rates are lower. The Fed's going to cut again, allegedly, right? And we're all aware of inflation now, and we're going to buy silver and gold. Now, the hedge funds, the big boys, have been positioning for this for months. And there's no doubt some of these guys are going to sell to them. And that's what you're seeing here. You're seeing selling by the big boys and the banks. This isn't the banks necessarily. You're seeing selling by funds that have been long for $400, taking some profits. They're not selling everything. They're just selling something. So I believe that we are in buy season and sell season at the same time. Sounds kind of wonky, but you have buying coming in when everyone is selling. The overlap is very pronounced. And I think, I could be wrong. I hope I'm wrong. I think that over the next 30 days, let's call it the next 15 days, that you could have a rotation of the selling overwhelming the buying, but never destroying the market. And here's why. Because for every 1,000 contracts that these macro discretionary guys are long, these big funds are long, they're probably going to sell 200 because they're betting on something big at the election. So I believe that we could, ironically, have a dip to buy in buy season leading up to the election. I'm not predicting it. I'm not long gold right now. I'm actually long oil. I mean, I'm long gold, but not speculatively. And I just wanted to share that with you. Let me just stop that so you can do your thing. But that's I think, and by the way, we haven't even gotten into our monthly stuff yet, but that really saddened me because I knew we were going to talk today, and I'm like, silver monthly high, let's go higher, and I'm like, oh shit, that looks bad. Anyway, I'm sorry. Go ahead.
Well, I mean, there's two follow-up questions I have, but one that's quicker. Um, if so, I mean, there's people they're concerned about the election and all that. Let's just say the election is not close. Then, let me go back. Is there a concern? So the concern about the election is that basically, you don't know who's going to be in the government from November 5th or whenever until January
Yeah, I mean,
19th.
I can
That's
answer
what the concern is?
I can answer that quickly. If you this is actually something that Michael Oliver and I share, at least from different points of view. The country has had increasingly contested elections over the last two or three elections, right? So TS Lombard, an analytical firm, really good firm. They don't have any bank clients. They're not like uh, in the securities business, they're in the analytical business. They have been studying, they have been monitoring the Trump and Biden, or not Biden, but the Trump and Democrat camps. And Trump has already hired more lawyers than he hired last election. Okay. And Harris, or the Democrats in general, have hired more lawyers. And they put a fine point on it. And they said, if regardless of how much they win by, your point about if it's a blowout, who cares? Regardless of how much someone has been beaten by, if Trump wins, if I can remember correctly, they did this like 3 months ago, it's really good. If Trump wins, then Harris will allege constitutionality risk, meaning he's a felon, he's the president. Now, your opinion doesn't matter. The point is, when a lawyer sues, they have to pay attention to it. If Harris wins, then Trump will immediately send lawyers to every state and say, let's count the ballots, recount, because of the mailed-in ballots. And so the T.S. Lombard report, actually, no, Michael Oliver said in something he said months ago, he said, you know what? We may not know. I mean, I'm not saying I agree with him, but it's not unreasonable to say this. We may not know without a doubt who the president is until inauguration day this year. And inauguration day this year is January 20th, I believe. So to your point, even if it's a blowout, there will be some residual arguments. So I believe uncertainty continues through the election. Now, there are mitigating factors to that, but I do believe that if I were a macro discretionary fund and I was long 1,000 contracts, let's say, I'd probably be out of 500 by the election, and the other 500 I would punt because these guys are in the money by $400 or $500. So there you go. That's my answer.
Okay. I'm just wondering, is there, because people are buying because they're concerned of that. And so if somebody wins, but, they have 320 or 340 electoral votes or whatever, if that will hurt gold because that diminishes risk. But the people you're referencing, they're saying, no, I mean, there's still going to be risk.
Oh yeah, I'm sorry. I don't think I answered you properly then based on what you just said.
No, no,
Okay.
I think you did because you're painting what
No, but you make
Michael
a good point.
Oliver and what T.S. Lombard are saying. I'm just thinking out loud. What if they're like fading that? Like if it's clear at
I agree.
least by the votes, like if somebody
I agree.
if it's not really that close of an election
No, I
and
agree.
Like, will does that hurt gold like the next
Okay,
day?
yeah, that's the point I think I need to make because I made this to subscribers last week. Regardless of the election outcome, macro discretionary will sell. How much? I don't know. If it's a blowout, they will sell a lot. If it's not a blowout, they will sell some.
If it's
The question is,
269 to 269, they'll still sell.
yeah,
That's
yeah,
what you're saying.
exactly. But I guess what I'm saying is to answer your question directly, you must assume that they will sell a large portion because they will close out by November 31st some of their risk. Number one. Number two, and more importantly, they're in the money by $300-400. So they're going to sell and they're going to say, well, I'll sell it $300 higher if it's a problem, and I'll sell it $100 lower if it's not. So as a risk reward trader, as a person who tries to emulate the things that Paul Tudor Jones does, I wouldn't say that I am anywhere near him, but the point is, if gold is trading here on November 4th, the day before the election, if there's a problem, gold rallies $300. If there's not a problem, gold drops $100. If you're a macro discretionary trader, you're saying that's 3-to-1 odds. I'll take the shot. And that's what they're doing. I think that's what they're going to do. So to answer your question, there will definitely be selling. Will it be higher or lower? It depends on how much freak out the Western investors do. And Eastern as well, because I think Diwali's coming up and geopolitical risk is really making people freaked out over there. So the proper answer to your question is there will be elections selling regardless. If it's a blowout, they'll all sell. If it's a tight race, half will sell. And the price is a matter of where the race is. But that's not the only reason people are buying. But there you have it.
Right. And then I guess the other follow up to uh, what you were talking about. So, I mean, you've talked about the factors that were pushing gold to break out 2100, and then the upside before we have Fed cuts and lower real interest rates.
Right.
I mean, all of those factors that pushed gold up initially, now are those receding and now it's just being driven by Western investors? And secondly, is there any chance that you could get the two of those buying together
Yeah.
to
Yeah.
for gold to even accelerate from here?
That's the $100,000 question, or 64, whatever it is these days. The short version is, while I'm just simplifying it, right? While Americans were ignoring gold and buying Nvidia, while the G7 was ignoring gold and buying Nvidia, the BRICS and the central banks in Europe that are very Eastern looking, they were buying gold for what, M trade, M bridge, what have you. And those central banks were underpinning. And then around March of last year, the macro discretionary fund said, oh, we see what's going on here. And they bought, and they bought, and they bought, and they bought, and they kept buying. Meanwhile, in the US, you didn't care about gold making new all-time highs because stocks were making new all-time highs. No one cared, right? And we were in a rate hike regime. And during that rate hike regime, people were saying, well, gold's really not to be trusted in this environment. You want to wait for a rate cut regime to buy gold. And by the way, we'll buy stocks as well. So now, to answer your question directly, now you have three buyers. You have three buyers before the US comes in. The first buyer is your BRICS, emerging markets, central banks, and they're buying here. And the second buyer above them is the macro discretionary funds. And macro discretionary are the largest hedge funds in the world. They trade bonds. They don't mess around. They trade all time zones, and they're very well heeled. That's the second cohort, right? The third cohort above them is the CTAs. They're small. They trade momentum, and once it gets going, they'll buy it. So you've got three buyers chasing this market up, right? So the central banks aren't chasing. I mean, they're bidding, but they're not buying the highs. They're bidding 2,500 now, 2,400, and everyone's buying ahead of them. So now you have all these three cohorts buying, and those three cohorts are buying for one reason, fundamentally. They're all buying because central banks recognize that the world is de-dollarizing and diversifying out of dollar risk, treasury risk, however you want to look at it. So let's call that fundamental buying. We're buying gold. And by the way, silver is in there too. We're buying silver for the same reason. The BRICS are going to use silver as collateral. The silver is part of the green. It's there, right? So they're buying it. And now the Fed cuts rates. And now the US investor who's like, well, if the Fed's cutting rates, it's okay for me to buy gold now, right? I mean, they didn't buy it before inflation,
Yeah.
right?
They didn't. Yeah, they didn't buy it when they should have 2 years ago at the low. But anyway,
Exactly. They're right. They're treating gold like it's a .com. I'm sorry, I'm dating myself. They're treating gold like it's a what do you like an eight picture,
yeah,
a
yeah,
non-fungible token, which it will be. So they're coming in now. I've seen the reports recently, and they're all very good. The Goldman Sachs report is extremely good. I shared that with subscribers recently. But what they're saying, what the bank reports are saying now, is they're saying these are the reasons gold has literally. I'm quoting one bank here, which is what you just asked. These are the reasons gold has gone up. Fundamental reasons. And we think gold has another $200 to $300 higher, 2,700, 2,900, 300, 3,000. And we think that it will go that much higher because now the Fed, it's kind of like the baton is being passed from the east to the west. And so they're all, well, not all of them, but several large institutions are saying publicly, they're saying the next $200 to $400 higher in gold are going to be on the back of the Western normies buying ETFs and futures and hopefully miners because the fundamentalists are on there. Well, I want to believe that, and I believe that could happen. And by the way, I'm not shitting on that. One thing the banks do is they will underestimate the demand of something that it's kind of like you open a nightclub up. It's like we're going to have 500 and 3,000 people show up. It's like, oh, opening night's really good. Well, opening night for precious metals could be phenomenal. And we're in the middle of opening night week. And I think the battle now is which macro discretionary funds are going to say, oh, I can get out now. I can book my profits. And which are going to say, who cares? I'm in it for the long haul. So the answer is if you talk to an investment bank, if you talk to a bank whose name starts with the letter C, if you talk to a bank whose name starts with the letter G, and if you talk to a bank whose name starts with the letter B and the letter M, the M, I'll let you know who that is. The M is MUFG, biggest bank in Japan, also a very G7, very, very important bank in the G7. If you ask any of those banks, they're going to say this to you. Gold has gone up because of the fundamentals. The fundamentals aren't dying. Excuse me. The fundamentals aren't dying. They're still there. And now the West is going to buy. So Goldman, all those other banks could really be right. But I'm still betting short term there's going to be a dip. That's it, man. It's like it's a battle now. It's like the smart money is selling to the stupid money, in quotes, the stupid money. But the stupid money is like, look, the Roman Empire was conquered by the stupid money. You know what I mean? Like it could happen again. You never know.
yeah. It's that quote: "Bad money drives out good money."
Yeah, exactly. Oh, there's one more thing. There's one more thing. This is actually, again, I'm sharing this with you before anyone else. The World Gold Council, which is notoriously neutral in their information, we like gold, but be aware of this. They're very, very careful. All right. Well, the last two reports, one has been literally saying Swiss pensions should buy gold. And then last week they came out with another one. Irish pensions. I know it's Irish pensions, not that big, but Irish pensions should buy gold. These are direct contribution pensions. So what the World Gold Council is doing is they're setting the table for your retail to buy gold as well, too. Anyway, what do they say? A snowflake is pretty soft, but an avalanche will kill you, something like that. So that's what we're looking at here. Maybe an avalanche. Who knows?
I mean, after some weakness for 15 to 30 days.
Well, maybe like, look, the way to answer that is to talk about my position, what I will do, what I might do. I'm not getting long right now because even though there's buying, and I know there's buying, and it's coming out because every bank on the street is saying it's time to buy gold, it's capped. It's not buying and stopping. I mean, if you look at the daily chart, it's a little bit overbought, still in a bull flag. If you look at the monthly chart, you've got to be out of your mind to be short gold. But if you look at the weekly chart, I say, well, maybe it's getting a little bit toppy. Maybe we can, like, we have a bull flag on the daily now for your technical people. Maybe we're going to have a bull flag on the weekly before we go. Maybe instead of, like, look, in 2016, Trump won, gold was like $100 higher that night and finished lower. That got stomped on. Maybe this year it's $100 lower and finishes higher. I mean, I'm just being contrarian about it. So I guess what I'm saying is 5 to 10, 5 to 20 days. If the market went higher over the next 5 to 20 days, I would not be a buyer on election day because I'd be scared to death it's too high. If the market were to drop between now and election day, I'd be considering buying. But I just want to be careful to say that the macro discretionary is the big unknown roll of the dice now. Like you said, what did you say? If it's a blowout,
Yeah.
I don't care how many lawyers Trump sends or how many lawyers Harris sends. The macro discretionary would be like, I don't care. They're going to press a button and sell. And
It's a
I don't want to.
very good point by you that big sell off could be bought, unlike in 2016.
Right. It's kind of like upside down. You know what I mean? Like, I mean, I could get into this from an oil perspective. I mean, I don't want to sidetrack you more. This is, obviously this is very fun to do.
Well, yeah.
But
I'm the king. I'm the king of sidetracks, but
right, well, I'll give it to you for 2 seconds. Before the U.S. knows it's going to invade a country in the Middle East, let's say the Iraq War 1 and 2, uh, oil will get knocked down, and then the day of the invasion, it will rally. So pretend that the election is the invasion. If you get it down low enough, you can stomach $100 rally. Just saying. That would be something I would do. By the way, they got the COMEX raising margins too. That's not done. Do not be surprised if they do like a double secret margin raise the day of the election. By the way, we raised margins 150% just for you, Vince, because I know that you're long. Anyway, you get it. I'm going to buy a straddle. By the way, I'm going to buy a straddle for this election. And I know that I'm going to be paying up, but I'm going to buy a straddle because if the market drops, I want to be able to buy it. And if the market rallies, I want to be able to sell it. So kind of like an iron butterfly, but in reverse. Anyway, so that's it.
you want to get into technicals?
I do. I do.
I'm just
Because I do,
yeah.
because this is like, I need to ask you stuff. Like, didn't silver have like how many years is it like a monthly high close?
I think 11 and a half since the end of, I think, 2012, since the very end
Yeah.
of 2012.
Putting
But,
you on the
yeah,
spot. Edit it out. Put the right number in. I'm just kidding. I'm just kidding.
but yeah, I can just keep it very simple. We have strong targets coming.
What does that mean,
Gold,
strong
well,
markets?
well, just like they're strong. There's a lot of things pointing to these levels. I mean, you have the
Okay.
cup and handle target around 3,000. So you have that for gold, which could be a magnet. And then silver, silver has quarterly resistance at $32. Also daily and weekly resistance at $32. Monthly at 35 is a very strong level for silver. So those
Monthly
are
at
the
35?
monthly at 35. If silver makes a really strong monthly close above 35, that will bring it that much closer to moving
Right.
to 50. So silver right now, it's like that 32 to 35. There's a little bit at 37, 38. That's basically where the resistance is on the way to 50.
Right.
So
Interesting.
monthly at 35 is very strong for silver. Also 32 quarterly as well. So and also the for silver, the yearly uh all-time high, I believe, is about 32. So if we're talking in January
Oh, we're
doing this
coming into
pod,
December.
yes. So it's the December
Uh,
31st, end of the month, end of the quarter, end of the year. And so 32 for silver, that's a yearly high. So if silver at the end of December were to take out 32, that would be a yearly all-time high close, and it takes out that quarterly resistance.
I have a guest here. I'm sorry. I'm sorry. I have a guest here. Well, otherwise, she'd start barking. So wait a minute. So wait a minute. We have an end of year close above 32 is an all-time high.
Yes.
Dude, you know I love that shit, right? Just for people who listen to your stuff and my stuff as well. When did we start doing this? Was it November last year or October or before?
I think 2022. I want to say summer of 22 or maybe fall of 22.
Yeah, but the monthly thing, when did we start really hammering that in?
Yeah, maybe November of last year or
Right, right. Okay. Here's why I'm bringing it up because let's say we started it in September, October. November came and you said to me, "Hey Vince, we could have a really cool November close." And we had it. And I was like, and you were like, technically, this is why this is bullish. And I was like, macro discretionary is going to buy this. And boom, they came in and bought it. And then December, we did it again. And January, this is fascinating stuff because we're coming up, I think, on our 1 year anniversary of calling these markets. And uh, if you're telling me that a silver close in December above 32 or 32.50 or whatever it is, that's going to reignite another round of macro discretionary buying. And hear me out, hear me out. It's not necessarily new money that's going to come in. It's going to be people that are long gold from 1900 selling it to buy silver at $32. And you're going to see that gold silver ratio just go whoop and flip. And so gold will stabilize at say 2200 and silver will stabilize at, if we get above 38, do we run the 50, you think?
yes.
That's
Well,
my goal.
if you're talking about 38 on a or just in general, or are you talking about like a monthly close or
Any way you want to. This is like,
yeah, I would say yeah, I mean I said yes, but doing a double take on that, I would say probably because what people have to understand is the resistance for silver on the way to 50, it's all from 32 to 38 basically.
really.
That's where the resistance is. And so that's why these next 3 months will be so fascinating. Again, 32 is resistance on every chart except the monthly, where for silver it's 35.
Right.
So 35 monthly for silver, that is a key level. And then you have 32 on the quarterly and the yearly. So here's the thing. If silver, let's just say it closes at 33 end of December,
Right.
then the last thing is can it take out 35 on the monthly? But by the fact that it closed above 32 and all that resistance at the end of the year,
Dude, do you have a
that
chart handy for this? Dude, you got a chart handy for this?
I could, uh, I don't, but
I'm
I mean,
interrupting you.
yeah, for the viewers, we can put it up.
Okay, good. As long as they see it, because I'm gonna watch this. Good. I'm sorry. Good.
No, but it's somewhat, yeah, it's a little similar again to a year ago. We're looking at, the quarterly gold made a quarterly
Right,
all-time high.
right. Yeah.
It hadn't broken out yet. So again, a close at just a close above 32 end of December, if it closes at 33, that is a huge signal because that's a yearly all-time high.
Right.
I think it would be the third highest quarterly close ever, but there's
Right.
lots of quarterly resistance there. So then if it does at 35 monthly close, that's the last resistance, basically last big resistance on the way to 50. But
Nice.
just like with gold, the close above 32 at the end of December, that would be a signal that it's going to. Doesn't mean it's going to do it in the next month or two,
Right.
but it would be a
I
good,
understand. I
yeah.
understand.
So
I mean,
those are really the key levels. 32 quarterly, 35 monthly.
that's really good. So we let's say we settle 33, we can have a pullback, a bear flag, I mean a bull flag, and then work our way higher. But the fact of the matter is, look, I want to add this. The discrepancy in price between silver and gold, while it has been justified over the last year and a half, because, don't hate me, silver people, I'm a silver person, has been justified because central banks aren't buying silver, they're buying gold. I believe, not predicting, but I believe, and I believed it for almost 2 years, that two things are going to happen to make silver catch up. The first one, and this one I'm not completely confident in being public, but it will happen. The BRICS are going to add silver as part of their safe collateral for their Enbridge access. You could see that Russia just announced they're buying silver. The second thing, and I think it's easier to understand the second thing, or less obscure, is that if you're a hedge fund or a macro fund and you have $500 in profit and you see silver's gone nowhere, you want to be first to take 20% of your gold and put it into silver. The expression we would say in oil is, oil's up $5, sell a little oil, buy a little gold, because you know it's going to catch up a little bit, right? The expression now is, I'm a macro discretionary fund. Gold's up $600. Sell a little gold, buy a little silver. It's kind of like you and I are long a miner, and it goes up, and we say, okay, let's take our profits, but let's buy some calls as a tail. Anyway, I think you're going to see a rotation into silver because central banks are not going to buy it at 2,800. I mean, if they do, we're in trouble. But I agree. I think there are two good reasons for say goodbye. Say goodbye. You've been a good girl. There are two reasons that silver can catch up, and the economic reasons and the fundamentals are all there. But yeah, I think like what you're saying is what we saw happen in gold in November of last year could happen in silver in January of next year. Or maybe not. That's your headline, or maybe not.
Yeah, not that I'm skeptical, but I wonder 3,000 is such a strong target for gold. So if gold runs to 3,000, what's the silver price? Is it stuck in the low to mid 30s? Is it stuck at 33, 30 or 35? Or does silver, is it at 37 or 40 when gold is 3,000?
You're looking at it technically. I'll give you three scenarios that I've lived through because I would trade one against the other a lot. Years ago, in 2011, I did as well. I'll give you three scenarios that are just basically like what I think would be on your mind. Geez, if gold's at 3,000, where will silver be? Well, it has to be above 32. Okay? No, not being sarcastic. It has to be above 32. So let's say gold's trading at 3,000 and silver's above 32. If gold goes back below 3,000, what does silver do? Well, unless silver goes below, the point is, as long as silver is above 32, then it's a buy as long as gold is above 3,000, right? Okay, here's the other scenario. Here's a scenario that I lose a lot of money on. Gold gets to 3,000. You and I have a conversation. Silver's trading 32 and a half, let's say. And I go, all right, what do you think, Jordan? You're like, it's a buy above 32. And I'm like, great. I go out and I buy some above 32 on my own, not your, I'm not holding you accountable. I buy it above 32 because gold's at 3,000. I see silver is undervalued relative to gold. Gold goes to 30. Here's where I lose the money. Gold goes to 3,100. Silver spikes to 35. I look at the screen. I giggle. It drops to 3,150 in 5 minutes. And gold's trading 2,800. And I say, what the fuck?
Yeah.
Fuck. And so the point is, on the way up, I'm saying this from a technical point of view. The technicals are always right. The question is, do you have your stops in to get out when the technicals work the other way? And that's really what it's about. Anyway, so I believe that while the big money will be worrying about sell some gold, buy some silver, sell some gold, buy some silver, I think the right play is to really truly look at silver as its own commodity. And when the rest of the world starts to look at gold versus silver, that'll be the wind beneath our wings. There you have it.
Yeah, I mean, what you talked about, that's the scenario that concerns me for silver, in that gold could go to 3,000, but after gold hits 3,000, it could come back, it could correct to 2,600. I mean, because if gold gets to 3,000 in the next few months, I mean, that's, what is that, like a 90% move in the last
Yeah.
2 years? What would that be? Yeah, I
Oh,
mean, that's, or 2.5 years, something like that. So we haven't had, like, gold hasn't corrected, I think, more than 7 or 8%. So
that's
if it hits
correct.
3,000, I mean, that's perfectly normal if it comes back to 2,600 or
Perfectly.
2,550.
I almost want it to happen. Oh, you mentioned 2550. That's an important number, not a technical number. There's something I just sent to subscribers. The commodity trading advisors, those wildebeest, those lemmings, they get in, they buy strength, and by the way, they can push it a long way. They seem to be interested in the level of 2550. Above 2550, they're buyers. Below 2550, they're sellers. Now, that's not to say it goes down below 2550. What it is to say is that if we were to drop to 2550, let's say during the next month before the election, I'd want to see if that dip is bought. And 2550 is, I think, going to be an important big picture number going forward, because you will see selling at 26, and it could capitulate at 2550. Anyway, there's a large cohort of small short-term oriented traders that will sell this market as it gets closer to 2550. Let's see who buys them.
Vince, on that note, anything else to add as we wrap up?
Well, we talked about this beforehand, and I want to bring it up to you, put you on the spot here. I know that you have a very snazzy suit if gold goes to 3,000. And the question that we're asking ourselves, or you're asking yourself, is, well, if gold goes to 3,000 and I wear it, I could jinx everyone. And if it doesn't, if it goes to, and I don't wear it, well, then I'm disappointing everyone from my really cool suit. So, let us know when you have an answer to that, because it could be important. Anyway, that's what I wanted to add. I
Okay.
think it's a good
Yeah.
idea.
Well, I'll let you know. I'll let you know. But yeah, Vince, as we close, tell our listeners how they can follow your work and subscribe to Gold Fix on Substack.
Sure, sure. Um, uh, I have a newsletter. It's called goldfix.substack.com, or VBL, Victor Boy Larry Goldfix. And that is a newsletter, for lack of a better word, where we put out institutional and public research for premium subscribers. And we put out commentary about the markets, much like Jordan and I are talking about here, minus the technical expertise. And we put out relevant stories, like if Tanzania says they're going to buy gold from miners directly, we're going to let people know about that. And we put out one or two stories a day, depending on the people. It's grown substantially over the last 3 years. Started as a hobby, and well, we're kind of proud of what we're doing, and that's it. That's it. You can find us there and take a look. We appreciate it.
Yeah, it's fantastic. If you're following the market on a day-to-day basis, or even every other day or every few days, you absolutely have to subscribe.
Thank you, Jordan.
So, Vince, on that note, we got to leave it there. But thanks so much for your time and great insights as always. And this will get more interesting in the next few months.
Wait, no, we can't be done yet. The 60/40 portfolio. We need to know. Is that going to break out yet? We need to know.
Well, I mean, it's really, really close. I think that is the answer to the suit question. When we get a definitive breakout there, that's when the suit has to come out. Because
Cool.
to me, that's when the real bull market is starting, or when it's confirmed.
When that happens, it's like 1975. That's it. I can't wait for that to happen. Anyway, thank you for having me. It's good to be here.
Thank you for tuning into the Daily Gold podcast. For more interviews, editorials, and analysis, log on to thedailygold.com. And for premium coverage of precious metals and the best junior mining companies, visit thedailygold.com/premium.